Most traders, they spend all of their time trying to figure out what to trade. But the truth is, knowing when to trade is just as important. And if you watch my channel, you know that we talk about this a lot because timing can really change your results. And today, we are talking about one of the most important and most misunderstood times of the trading day. Hello everyone, I'm Kathy Lien. The first hour of the US market open is often called the amateur hour. And here's something most people do not realize, that this behavior is the same whether you're trading stocks, stock indices, futures, gold, or even Forex. So when the US market opens, volatility jumps across the board. And this is at 9:30 a.m. New York time. You'll see liquidity surge, order flows, they hit the tape, and the reaction is spilled from everything from NASDAQ futures to gold to the Eurodollar. So in this video, we're going to break down exactly what makes the first hour so unique across all of these asset classes, why it moves the way it does, and how you can trade it smarter, safer, and with more confidence. But before we get started, do me a favor, please hit that subscribe button for more trading tips and weekly market lessons. You won't want to miss any of this. Also, check out my new free newsletter, proptraderedge.com, for prop trading tips in particular. Now let's get into it. What exactly is the amateur hour? The amateur hour is the very beginning of the trading day, right when the opening bell rings in New York and the market comes to life. Everything suddenly speeds up, prices jump, liquidity surges, and traders rush in. All of this creates an environment that is loud, emotional, and oftentimes completely disconnected from the real direction the market will take later on. And this is so important for you to understand. And this is not only true in stocks. You'll see the same behavior in equity index futures like the NASDAQ and S&P, gold, major Forex pairs like the Eurodollar, pound dollar. Whenever the US market opens, the volatility spills across these markets. To many traders, amateur hour looks like opportunity, but it can also mean catastrophe. Fast candles, big moves, instant action. But what you're actually watching is the market digesting everything that has happened overnight. And it can be messy, it is reactive, and it behaves very differently from the rest of the day. You may see these moves that appear powerful but collapse quickly, moves that look directional but are actually just liquidity bursts, or patterns that seem meaningful but fade before they actually develop. None of this is random, and that's really the point that I want to share with you, and I want to show you how this looks like in the real live charts. So this choppiness right here at the beginning of the trading day is exactly what I'm talking about. We're looking at the NASDAQ, and we're looking at the 5-minute chart. You may think that, okay, this is the overnight high, and once it breaks the overnight high, I'm going to buy and go long because it's a breakout. Wrong. Instead of breakout, it becomes a fake out. You think the second time it does it, I'm going to buy because it's going to go long. Wrong. This is the first hour of the market open, and it's not until after the first hour of the market open do you truly get the real trends of the day happening in the real direction, which ends up being here. The first hour of the market open in the NASDAQ here is very, very choppy. We can look at another time. So if we look at the day before, scroll over to the day before, the first hour of the market open. So yes, we get a huge run up at the market open, peaks right at 10:30. You think, it's going to keep going. Wrong. This ends up being, the end of the move, and it completely reverses in your face. Let's take a look at gold and see what is happening. So gold, the first hour of trading, you've got the first hour of trading. Let me pull up my arrow right here. The first hour begins right here at 9:30. And you think, okay, break down, maybe I'm going to sell. Wrong. And then the first hour trading ends right over here at this level. So you think, okay, we've got a breakout of either the previous high over here, we got a huge green candle, I'm going to go long, buy the breakout. Maybe you got a little bit of pips, but boom, complete reversal move against you. This choppiness in the first hour of trading happens again and again and again. And this is where you have to know how to trade it right. So why is the first hour so chaotic? It's because the same forces that make the stocks wild at the open also cause similar reactions in futures, gold, and Forex. Number one, you've got overnight orders hitting all at once. Retail and institutional traders, they place orders overnight that get executed immediately at the market open at 9:30. And this creates huge, unpredictable bursts of buying or selling. Second, you have traders who wait for the open to jump in altogether. The problem is that most traders, especially retail traders, don't know that they can trade pre-market. So they wait for 9:30 open, and they pile in at the same time, adding emotional momentum to the mix. Third, overnight stops trigger in clusters, and they tend to do so right at 9:30 because they have stops in obvious places. And then the market open, it hits these levels, stops trigger rapidly, creating fast temporary moves. Number four, Institutions rebalance at the open. You have large funds who use the opening bell to hedge or adjust their positions when liquidity is the deepest. Their moves can cause sharp but meaningful swings. And number 5, overnight news tends to get priced in. You have earnings, geopolitical developments, macro data, central bank commentary. They all get absorbed at the open, and usually in dramatic fashion. This cocktail of forces is what makes the first hour of the trading day the most unstable period of the day. Now, let's talk about what this means for you as traders, because this is where most people get caught off guard. High volatility does not mean high opportunity. The candles may be bigger, but that does not mean the setups are better. Most of the movements in the amateur hour is noise, not trend. You're seeing order flow and emotion, not structure. I want you to remember that most early breakouts are fake outs in the first hour. Very, very important. The very first breakout of the day often looks like picture perfect. And more often than not, it's a trap. You saw that in the chart earlier. That breakout is usually powered by stops hitting, retail traders chasing algorithms, sweeping liquidity, institutionals adjusting. And the moment the fuel is gone, poof, the market snaps back. This is why so many traders feel the market reverses right after they enter. The real move usually begins after 10:30. Once the dust settles, the market finally begins to behave normally. This is when the trends form, the pullbacks behave, support and resistance start to matter, and candles become cleaner and the direction becomes clear. I want you to think of amateur hour like shaking a snow globe. Once it settles, it's finally clear. So here's what to avoid during the amateur hour if you want to stay safe, disciplined, and profitable. Avoid these mistakes. First, do not chase the first breakout. 2, do not trade oversized positions. 3, do not hold losing positions hoping they'll come back. 4, do not counter trend scalp unless you're very experienced. And 5, do not trade emotionally or impulsively, because amateur hour punishes impatience and emotional decisions. If you want to trade the amateur hour safely, this is how you should approach it intelligently. You've got to, number 1, keep profits nimble. Take smaller, faster wins. Number 2, cut losses immediately if it goes against you. Exit fast. Open losses, should be closed quickly. 3rd, use tighter stops. Give the market less breathing room. 4th, only take high probability setups and the setups that you trust. No experimenting. And 5th, wait for the confirmation retests that are far more reliable than the burst. Let the market prove itself. The bottom line is that the first hour of the US Open is emotional, reactive, and chaotic. But once you understand it, the chaos becomes predictable. And once the noise fades, the real move of the day usually begins. So patience pays off as clarity comes after the chaos. If you found this video helpful, make sure you hit subscribe for more trading tips and weekly strategy lessons. I also want to hear from you. What is your favorite or least favorite, most frustrating time of the day to trade? Because maybe I can do a video on that. Tell me in the comments below. I read every single one. And if you want to know which trading firms or brokers that we trust, check out the curated list of the best prop firms, exclusive discounts, and top brokers in the description of this video. Thanks for watching. I will see you in the next one.